The Rebel Capitalist Show. Would you consider yourself more of a tops down, like a macro guy first, and then you get into the businesses? Because I know you're really good at analyzing balance sheets and P&Ls and financial statements. So with your investing framework that you use for your own portfolio, where do you start?
Start with the company, usually. 9 times out of 10, I start with the company.
Okay.
Yeah, you want to always be mindful of whether the sector is experiencing tailwinds or, there's some airlines that probably looked very cheap if you were looking at their 2020, estimated earnings 2 months ago, but you had to be cognizant of the fact that the entire industry had just basically stopped, right?
Yeah.
So you can't ignore the macro picture, but 9 times out of 10, and what I'm looking for the most part is when I invest in equities is I look for special situations. I'm looking for like value to be unlocked, or even if it's, a situation where there's an activist in there and they're trying to unlock value. I like to look at those types of cases. I like to look at names that are polarizing. I like to look at names that get a ton of coverage, whether for good or for bad reasons. I find that that's where the most opportunity is if you can kind of assess. What I've always been good at, what I think I've always been good at, is being able to, a special situation is called a special situation because it is a situation where if you can figure out and perform the analysis correctly faster than anybody else, you're almost assuredly going to make outsized returns,
yeah,
right? So, right, a special situation can be anything. So let's say it's a rumor on a merger or an acquisition, right? And it's a stock that's trading at 50, but the rumor price is, 60, right? And you can figure out that the merger is going to go through. Well, you're entitled to that arbitrage then if you think if your analysis says it's going to go through. But if the stock was trading at 40 before and you think that the company that is rumored to be acquiring them doesn't have the financial means to pull it off, you can make money going the other way. It's just a question of, special situations are like these things where the market kind of jars the price of something loose.
Right.
And it's this race to see where it's going to like eventually revert to, right? It's like a dog walking off a path. If you're walking this way down a path and the dog's wandering up and down and up and down, at some point the dog is going to revert to wherever the path is. So it's your job to try and find the path before the rest of the market figures it out. And a special situation is generally an event, whether it's a short report, whether it's a merger and acquisition rumor, whether it's a rumor about a bankruptcy, whether it's a executive change, whatever. A special situation is a huge shock to the market usually, and then a scramble to figure out which likely outcome is going to occur. And those are situations that I like to look at. I like to try and analyze and get to the bottom of before the rest of the market. And if I can't, then I usually wait on them. And if I can, then sometimes I take sizable swings.
It seems like that type of approach would remove the Fed to a certain degree as well, where if you're just betting on the S&P short or long, you've really got to pay attention to what the Fed's doing. You've got to be able to predict that. But with an individual business, especially in these specialty situations you're referring to,
right,
it might not really matter what type of 4-letter or 5-letter program the Fed just set up. It's still going to move the price one way or the other.
Well, and it's almost like macro is the uncertainty.
Yeah.
Right. People say, oh, there's an unlimited Fed put and there's unlimited cash to hold up markets and all this other shit. But the point of the matter is what we're doing is unprecedented. So, George, you and I are your viewers and my podcast listeners. Nobody knows if tomorrow's the day we're going to wake up and confidence in the Fed will have been lost. And I don't know what the catalyst will be to that. Maybe it'll be Warren Buffett dies. Maybe it'll be Jeff Gundlach says something on CNBC. Maybe it'll be the crypto market imploding. I don't know what it'll be. But what I know is what we're doing now is unprecedented. Right. And so with unprecedented paths come unprecedented outcomes. And I really don't know. The Dow could be at 40,000 or 10,000 by the end of this year. And I wouldn't be surprised either way. I mean, how ridiculous is that?
Yeah.
I mean, if we had a real market, it would be very easy to say, well, the economy is getting plowed, earnings are coming down, we're in a lot of trouble, I expect to see the market much lower at the end of this year from where it is right now. That would be like normal free market. But with the Fed in there, it's like, who the fuck knows? It's a free for all, and these geniuses at the Fed don't understand that at this point, they're adding to the volatility instead of squelching it. So for me, when you look at a special situation in a company, everything exists kind of within the ecosystem of the company. If the company owns 100 acres of land in Guatemala, well, that's 100 acres of land in Guatemala, and that's not going to change no matter what the Fed does.